Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss my swing trade in VXR. All right, well, Franz, how are you doing today? And what's your first impression of this chart? And specifically, the point of entry was right here. So everything preceding that. If we would analyze this chart and just at the point of entry, how would we form our opinion of the bias?
Hey, Ramon. Good question, because bias, timing, and character are the three criteria that all of us traders need to be considering before we make our trading decisions. So getting the bias right is really, really important. And what are some of the things, some of the flashcards that I would use based on what I've learned from your teaching? Well, first, what was the previous trend before? Because obviously we've got a trading range here. So what was the previous trend? It was an uptrend, right? And that's the first thing that we always take away from looking at what got us here into the current trading range is what came before. And if it's an uptrend, then the chances, the odds, the probabilities are that we're going to exit from this trading range in the same direction that we came in. So we've initially got a bullish bias to begin with, and yes, we're looking at a reaccumulation structure. So what do we see? Then what we want to look at is what's the structure itself. We want to find the initial change of behavior that puts us into this trading range, because that change of behavior is going to set the bounds of the trading range itself and give us some idea of where support, resistance, and give us a frame of reference. So that's what you're doing right here. And then the next thing we want to look at is what's the behavior within the trading range, and let's take some flashcards away from that. Well, first of all, how far down has this change of behavior taken us versus the previous move up? And where's the most important bar that we want to reference as we're looking into this trading range? Well, to me, it's this kind of climactic buying bar in late June that puts us into this trading range and shows us just a tremendous amount of demand. And we want to see what's going to happen now as supply comes in, because there's always going to be this opposing force. What's going to happen as supply comes in and attempts to go the opposite direction of this demand, and we want to see how that plays out. So here's this whole you might almost say that little yellow area is a sort of a very substructural kind of distribution that we're looking at that takes us down. So we've got that to deal with. And once we get down into the initial selling climax out of that, we see another big amount of volume come in, which has to be demand because it stops the downtrend. So we're thinking, okay, well, here we go. We've got an automatic recovery from that. And then what happens going across? Well, compare the downtrend that got us here into the selling climax to this next reaction that we're looking at. Let's do 1 to 2, and even 3. Absolutely. Let's look at how these compare to each other. And I won't ask you because you're always asking us, but I'm asking the question that you ask: what looks more bearish? What looks more bullish? Which what's the character of these downtrends? And we look at a lot of different things. We look at what's the spread? What's the distance that it travels? What's the volume characteristics? And it is so obvious that 3, there's just no selling there compared to 2, and especially compared to 1. So, conclusion, looking bullish, and look at what's the attempt in this last reaction in number 3. It's to push down. Sellers want to push us down into the bottom of the trading range. Do they succeed? Negative. So, right there, that's just a huge clue that this is a bullish pattern that we're looking at here. And then the last question is, well, what's the timing for our entry? And one of the things that I like about this is those last two little attempts to push price down, volume picks up just a little bit on that last bar, that one you're circling right there, nothing happens. Well, that's our timing bar right there. Those are our timing bars. And, as soon as we see, volume come in and price move aggressively up, it's telling us, time to go, which you
Hmm.
nailed it.
Yeah.
Did I
Okay.
miss
Well,
anything?
yeah,
I'm sure I missed a lot.
really good analysis. Yes. Really good analysis. So I'm just going to add to that. I'm not going to repeat what Franz has said because everything was great. Um, so you want to notice the character with which the price moves. Right away, you might be thinking, well, this is not that liquid of a stock. So then the question becomes about the selection. So why are we selecting this if it's not that liquid? Well, because currently, well, as the trade was happening, I don't know when this video gonna come out, whether this situation is gonna persist, but I think it will be. So selection is based on the idea of what is the hot industry group right now, or groups. So for instance, when we had renewables being a very, very hot industry group, majority of the stocks, including the low liquidity, a small cap stocks in that space, were just running away. So you want to recognize that moment in the rotation and in the way of what is hot right now and participate in that group. And there within the group, you might choose the stocks that are moving in a specific way. So this is a biotech stock. And we know that the biotech just recently has been in the rally. It reversed and then for like a month or more so has been in the rally, in the uptrend. So you want to find either, the leadership of this group, or you want to find some stocks that are of value, and they will be pushed up kind of in synchronicity with the whole group. So that was the whole idea about the selection. Then you have to notice the character itself. If the price would move, then how would it move? In which way? So we're seeing how abruptly price goes up with a lot of gaps, and then it's always associated with big spikes in the volume. So, and you could see it everywhere. And you want to have like a somewhat of the considerable amount of volume, because the more volume you have, the bigger the move, that is being shown to us. So you kind of could project from the volume signature based on where it is in the structure. So for instance, if you have this volume signature, which is comparable, but structurally different spots, right? So for instance, this is phase C of a reaccumulation, and this is an automatic rally after the selling climax. So two different structural spots, same volume signature, so different outcome. When we come to the end, and let's say that, and I don't know, Franz, how would you label the phases here? What would you say?
Um,
A,
yeah, some sort of a reaction right in there. So that's a testing area.
let's
And
see.
see, yeah,
Yeah, that's
yep.
just like, it's a sprint type uh, secondary test as a minor sign of weakness. So it just shows that there is no demand here. That's the problem. It's not like there is a lot of supply. There's not a lot of supply, but some supply produces this type of undercutting of the support just because demand is just so passive at this point. And that produces that minor sign of weakness, suggests the retest of the same area. Retest comes at a higher low. So
Mhm.
maybe like this, something like this. And the reason why like this, because phase B we usually would prefer to be the largest among the three of A, B, and C. So as we're coming into the point of entry, we want to observe what kind of volume signature we have. So, and then compare it to something that happened prior to that. So obviously not this type of volume signature. And as we go through the trade, we kind of recognize that it's not the same. So we're not expecting, as aggressive move as this one right here. So probably something where we go up, we have a reaction, something like this type of volume signature. And then we climax on some kind of volume spike, and that would be it. So we need to keep those things in the consideration as we develop the trade. Another thing here that is important is that this is the area, this is the cluster of resistance where we had, let's just put an all-time high here. So our initial targets are all going to be around this. If we're thinking that there is some kind of sign of strength overcoming this all-time high, then we would be thinking that the price is going to overcome. So just based on this, in my mind, I have a target of $20. And this was not necessarily a PNF count, which you could take, and here it is. Here is your PNF count. I did not do that. You could just kind of approximate the structure as to where the price would go, and then it would react there. So my expectation was that we're going to have this, major sign of strength above all-time high, and then we're going to consolidate. You could also do, a very minimalistic target projection based on the height of the trading range, so one-to-one relationship, and you could take and create a zone out of that. So, for instance, okay, how many columns here? 3, 4, like 4.5. 1, 2, 3, 4, 4. 1, 2, 3, 4. Yeah, 4.5. So here's your target. Another way of measuring. So you get a confirmation of this around $19, $20 type of target. So that's what we need to remember. Also, in terms of the execution of the trade, so this was an options trade, obviously calls, directional calls. So we want to get out, on the way up. We don't want to get out on the way down with options because the premium would collapse really fast. And with options, so we've entered at 850, our strike was 12. And those were short-term options. Okay, so I'm going to show you the exit. Everything was kind of okay on the way up. And I'm going to show you this day, the intraday action on this day, because this is where the mistake was made. So here is a 1-minute chart. And this is an overnight action. And we kind of could see that, a significant reaction, and then reaction into the beginning of the day. And then the price starts to recover. So, and for some reason, I didn't put an exit here, which is probably very unconscious because I don't like it. So my exit was all in kind of like this area right here. And specifically here, the largest, exit was. So, and it's clearly a mistake. So let's kind of like go through this mistake and try to understand what was going on and why, the exit was premature. So, Franz, what are your first thoughts on this?
Well, first of all, I think it's great that we're going from, the high time frame down to the, quintessential time frame here that you're trading in, because you've got to understand the big picture and understand where support and resistance are and understand what your kind of targets are, because you're not going to get them off of the smaller time frame. So the first thing that I'm looking at is where this little trading range where you made your exit is developing, and go all the way across to the left, and you can see that there's, we're entering a point of resistance here from, what we're seeing in the overnight session. And so that's probably the first thing you're thinking about. Well, we've hit this resistance area.
Plus, it's in the target zone.
It's in your target zone, secondly. And so those two things to me are pretty obvious. why that would cause you to be thinking this way. And third, it's options. So here you are, you're coming up and you're testing the supply line of this up channel, which I guess the one question I would say I would ask you is, this really, is one test of the supply channel enough to cause you to, to want to get out?
I think also what was interfering is just kind of like my day. As I was trading this, was distracted with all of the business meetings that I was in. But I was talking to one of my colleagues yesterday. I was kind of bringing up this issue. I was just trying to figure out, like, what's the solution there? If you're busy but you're still trading, how do you actually behave? Um, and the suggestion from the colleague was, well, you just have to be available. You have to be there. So it kind of felt, and I explained it to him, that in my case, it's just unacceptable. And the reason why is because, well, um, I'm not gonna stop, going through my, business meetings because I have to. So the challenge for me is not to think that I need to be available. The challenge for me is to be momentarily available as the chart unfolds and have the capacity, and this is very important, so please pay attention, have the capacity to momentarily go into the clarity state of mind and quickly make a decision, the correct decision. So that's the skill that I'm developing right now. Being busy and yet seeing with clarity the chart and seeing with clarity all of the signals that are coming and being more precise in this kind of like more pressured environment. And one might say, like, well, this is not achievable. Wrong. It could be achievable if you train yourself. Another person
Mm-hmm.
might say, well, maybe this is not necessarily what I want to do. And that's totally fine. You just define for yourself the level of engagement and commitment with the market, and you define yourself what kind of behaviors, and you define this either unconsciously or consciously. So there is no choice there. You a choice only. You want to do this like with your mind, with your thought, or you're still gonna make that decision, but you could be prone to make it unconsciously. So um, we always, as traders, want to get to that choice, which is a conscious choice. So the choice that I'm making is that yes, I understand that I have to be available. Yet, I understand that I'm not always going to be available, but I'm going to be available through different moments. So as I come in into this moment, what do I see?
Mm-hmm.
Yes, resistance. Yes, target. Yes, climactic run somewhat on the increasing volume signature. So, uh, is this the final run? Well, I think that characteristically, we wouldn't say. I mean, like even the momentum at the beginning of the day, of the low,
Right.
I'm sorry,
Right.
has a little bit better character to the climactic run. Plus, it doesn't really go into the overbought condition. It's close, but it's not there. Here, it's an overbought. Here, it's much clearer climactic run. Here, it's much clearer climactic run in terms of everything, right? So the highest volume signature, the biggest advance, the biggest momentum for the day, and then look at this immense overbought, overthrown condition. So this is where the exit should have been on either of them. I think I would be satisfied on either of them. So this is a more appropriate exit. So I think that it's just not being able in the moment to concentrate and have the clarity about the chart. That was the biggest, the hugest mistake. And when you don't have the clarity, it doesn't really matter whether you know material or not, right? You could know exactly that this is not as climactic as you would prefer it to be. Maybe you would be thinking, well, it would be great to see you overcoming the resistance, the overnight resistance, and then um, closing above that as kind of like on the major sign of strength. But at least there was a recognition that this is the day, right? So this is, imagine the price going in a day action from 14 and a half to 24 and a half. I mean, this is a big, big climactic run, almost 50%. Is it? No, even more than 50%.
Mhm.
So you want to close the position here. It's just a matter of the timing, like where do you close it? And obviously, I'm not taking, half of the potential move here. And because those are options, this is just, and we are deeply in the money. So the strike was at 12. So you can imagine
Mhm.
like from like $20 to $24. This is $400 per option. And I had, somewhat a considerable amount there. And it was amazingly profitable trade, but it just bugs me that I didn't take this last move. Franz, shall we do the post analysis?
Yeah, and maybe let's just mentally talk about this for a second. Um, in your case, you're being pulled in a whole lot of different directions. You've got a whole lot of balls in the air that you're juggling all the time. So for you, it's like you've got to almost visualize. I've got a switch. I've got a light switch that when I'm ready to concentrate on this chart, I'm going to hit that switch and nothing else is going to enter into my head,
Mm-hmm.
into my mental process besides, it's actually a physical process of hitting the switch and changing completely, you know, anything else that was going on before that you're doing as part of your day is gone, and I'm totally in the moment looking at this. And you know, how do you get there? It's practice. It's practice. And you're so good at doing analog. So, like you say, you see the analog, but you don't really act on it. And, just get there. Just hit the switch.
Yeah, yeah, it's a really good advice. Well, first of all, in two directions. The first one is you have to practice. So some students come and they say like, the simulation is just, it's not good. It's not the same as trading. Then I say to them, okay, well, what about forward trading? And they would say something like, well, it's still not the same. It's still not trading. You don't trade with real money. Um, to me, that's kind of stupid. And I'm just going to be flat out, straightforward with you. It is very stupid if you think this way. There is really nothing in the world that is being achieved in terms of the high mastery without practice. And if you don't recognize this, then you just basically do not want to practice. You want to improve yourself, but you don't want to put in the hours and work and effort and energy into something that you want. And that's your problem. So I hope I'm being brutally honest here and I'm pushing you guys to consider an alternative to your current behavior if you're not practicing. Not practicing will lead you to the same place where you are right now. Because without practice, without experience, you really cannot improve. And the experiences that we usually have in the marketplace, well, imagine you're a swing trader and your average holding period for the winning trade is going to be like, let's say, like a month or two, right? You're most likely going to have between 20 to maybe like maximum 50 trades per year. What kind of experience is that to have, let's say, 20 trades per year? That's nothing. Even if you post analyze them and so on and so forth, you really have to put in maybe like 1,000 trades per year in order for you to significantly improve your skills. So um, don't come to me and to our classes and just say that you don't believe in simulation. I'm not gonna teach you. Uh, in France, I don't know. I'm probably too harsh, but that's
It's all right.
that's
It's all right. You
that's how
sold me, so
yeah,
we're
but
good.
that's how I feel. I mean, like that's the reality of my thinking. I don't want to work with somebody who doesn't work on themselves and doesn't push me. Like if I see a lot of our students work each day, each week, and then I feel motivated and they're pushing me also, to be so harsh on myself and to work and work and work and work, and that's how we improve. And then people come back and they're like, wow, I've done so many simulations and I see now the market better and I trade better. And what do you know? My P&L for this month is like, like 30% up or 40% up or something like this. So don't be lazy. Do not be lazy and analyze, analyze, analyze. All right. So let's post analyze our behavior here, friends. So bias, most
Yes.
definitely yes. Timing, most definitely yes. Character, most definitely yes. Point of entry, yes. Stop loss, yes. Add-ons. I did have an add-on, so I'm gonna say yes. And the exit, I'm gonna say no. So, what do we have for the variance then?
6 out of 7.
86%. And then the biggest comment, I would say, so this kind of like in the moment clarity. Secondly, we could go through this, but again, I think the mistake was more mistake of the awareness in the moment rather than technical mistake. But from the technical perspective, if let's say you achieve that clarity, you should be seeing what? Um, better identification of the climactic run.
Yep.
And then change of behavior. Yes, it was a change of behavior for this trading range. There was nothing else. So, so I would just say this too. Franz, what else could we add to this? And more importantly, you were talking about the rule of how to like concentrate in the moment with all of this busy schedule.
Yeah, yeah. I don't think you can really add much more to that. One thing I was going to ask you, which you actually answered without me having to ask the question, is, how did you end up selecting this particular candidate? And go back and re-listen to what he went through. Listeners and watchers go back and listen to the whole mental process to actually come with this trade in the first place. Is
Yeah. So
good.
hot group, the one where there is rotation too, right? So we want to find the groups that have rotation too. And then there you just, there are quite a few candidates you could find. So depending on the character of the price movement that you want to have, you could say, okay, I want a big cap in a hot group because it's gonna move, but it's not gonna be like very, very. It's still gonna have a lot of momentum, but it's gonna move differently than, let's say, a low-priced small cap stock. Well, I was beating myself up. This was closed just recently, right? So um, on the exit part, and this is kind of, you really have to develop all this mental stuff because you could develop, and this is what I'm feeling. I was talking to somebody describing the analogy. Um, you could be very knowledgeable about the market, which I think I am. You could have a lot of skills developed about the market, which I know that I've been working on for years and years. Um, but you still could be stopped by your mental landscape. And the mental landscape comes, from your upbringing, from your culture, from the family, school, and then it's being reiterated. Your behaviors are being reiterated during the whole, adolescent years, and then further as you go through life. So you reinforce the behaviors that were formed in you before, and then you come to trading with that. Imagine that, right? What a dilemma! What a dilemma to have if you have some problems and then you are applying them, in the stock market. You're gonna repeat, the whole kaboom there. So I'm agonizing. As I sleep, I dream this trade and I dream this exit, and there is a regret in me. And then the next day, I wake up and the price is here. So this would mean that all of the profit, which was, somewhat considerable, profit, would be gone, would evaporate, literally, in a single overnight action. So a very interesting mental perspective there. What would you rather have? Would you rather have this trade with the exit, which is not most optimal, but have all of this profit, which is again, it was a considerable profit, or would you rather wait and then kind of lose that profit, almost all of it? So perspective.
Are you asking?
Well, sure, go ahead.
Well, yeah. Uh,
Yeah,
the former rather than the latter,
of
obviously.
course. Yeah, yeah. So maybe this is a very interesting episode in terms of the way of how you should be thinking, and that you should be thinking about your mental game. Especially, and I wouldn't be advising to think about the mental game to the beginners and even intermediate traders to a certain degree. The beginners, if they're going to think about the mental game, they will still lose money because they don't understand the technical mechanics, the mechanics of trading. You need to acquire the basic mechanical skills as to how do you read the chart, and then more intermediate skills as how do you trade it. And only after that, then once you have some kind of proficiency with this, the only thing that is going to interfere most of the time is your mind. And then you start working on your mental game. So, and I think maybe this is a good cliffhanger to leave our listeners and watchers with, and to go to the next episode, Franz.
Sounds great.
All right,
Very instructive. Very instructive.
thank you guys. And as usual, if you have any traits, let us know. Email us at wyckoff@gmail.com. And by the way, both of us would like to thank you for all of the comments that you leave under the videos. So we appreciate this. Thank you so much.
Thank you, Ramon.